and also we are looking at the application of technique for buying on dips. So with this we had discussion last week in Nifty index as well as Bank Nifty as well as in some stocks. So we are going to apply the same thing in commodities and look how robust it is, whether it needs any sort of adaptation for that. So we will first look at the overall fundamental and technical picture of the commodities market. Now, right now gold, after having dipped below 1700, it is always finding support very closer to the 1680 levels. If you see, gold has been getting support around the 1680 levels. So this has held for the last so many months now, and every dip that comes closer to 1680 gets bought and it bounces above 1800. So right now it is very closer to 1800 levels, and the fundamental picture is such that the gold continues to be in a big consolidative market that is between 1700 and 1900. So sometimes it goes above 1900, but most of the time it is trading between 1700 and 1900 with an average price of something like 1750 to 1800 levels. Now the reason is that in the gold is unable to make up a firm stand for going up any significantly, mainly because of the US interest rates. US interest rates now is in the path of going up. Generally gold does well when the US interest rates fall. That is, US interest rates should fall. That should happen. Then dollar should weaken. USD should weaken. So these are two important parameters, and mostly excuse me, it is correlated to this. So gold goes up when the US interest rates fall and your dollar weakens. So now is the time when the interest rates are going up, but the long-term yields have slightly come down. So that is the reason why we are seeing gold not going down significantly, getting support around the 1680, 1700 levels, and then moves up towards the 1750, 1780, then even crosses the 1800 levels. So gold right now looks to be a commodity which need not be bought in a rush at rally, but we have to use the buy on dip strategy as far as gold is concerned. So you can look at the if you are an investor investing in gold ETF, then probably you can look at a weekly chart, monthly chart, and then time your decision of buying using a daily chart, so that you can use for as far as the ETF is concerned. And then of course you can always look at some sort of an SIP in ETF, and then with a considerable amount of investment if it drops below 1700. So that is the approach that you can take as far as gold ETF is concerned, because gold can be invested in many forms. That is, probably you will be looking towards buying gold bars, gold ornaments, as well as gold ETFs, and then trading in the normal commodities market, which we do. So if you are an investor in gold, either in the form of gold bar or in the form of gold ETF, and in that case, chasing this at above 1800 is not a very wise decision, because normally you will not get much of a return about this for the time being. At least it will take at least 1 year, because interest rates will go up till December. Then probably next year, if recession sets in US, then interest rates may again slightly retrace back towards the middle of next year. So that's the time when gold prices can rally significantly. So right now it can be bought on dips. So now we will look at the technical picture of the gold, both in terms of the monthly chart, weekly chart, and daily chart. Right now we are in a daily chart, and we have done what we have done is we have done a trend line graph here, connecting the two big tops, which is the 2070, which is the recent high, and then the next important top, which was around 1998. So 2070, 1998, when we connect, that trend line is coming closer to the present price, which is 1800 level. So somewhere around this level, there is a chance that probably there could be some resistance as far as gold is concerned. Right now gold continues to be on the upswing, that thing, but when the trend will get over, that is what we need to see. So right now those who are looking towards trading in gold using dollar gold as a barometer, and in that case we should look towards a stop loss which should be below this, that is either this or this level. So probably we can use this level. The immediate stop loss comes below 1765. So one can stay invested for some more time, keeping 1765 as a stop loss. So stop loss in gold, USD gold, is now coming to 1765, and whenever it falls below this, which is around 1797 to 1800, you can put in a stop loss as far as the Indian gold also is concerned. So Indian gold generally is holding up because the compared to the dollar gold, mainly because of the rupee depreciation. Because Indian gold is a combination of both the international gold price as well as dollar rupee. So in dollar rupee, the last couple of months has advanced from below 73 to 80 levels. So this has given almost a 10% fall, which is what probably the entire rally that probably we have seen in gold in Indian rupees has come basically because of the rupee depreciation. So if you look at the gold chart in rupees in a big picture, then also look at the trading costs. So now gold gold futures, MCX futures. So this is the gold MCX futures, and literally this gold in India, though it dropped out to 49,534, so it has not gone much below the 50,000 mark. As far as the 10 gram gold is concerned, we have not dropped much below the 50,000 mark. But at the same time, this sort of an gold holding up around 52, it went up to something like 55,000, and it is down to 52. So 5-6 rupees only we are down from the top. But whereas international price from 2070, we are at around less than 1800. So there we are down by more than 10%, right? So the reason why we are outperforming compared to the international price is because of the dollar rupee depreciation, okay, the rupee depreciation. So we will always continue to outperform international gold because we have a currency depreciation also, because on a yearly basis over a period of time rupee depreciates by around 3 to 4%. So that is the take that we have on the gold, plus any appreciation that we may get on the gold price in internationally. So right now Indian gold price is up, and let's look at the weekly chart here. The weekly chart is also quite good, and we see the trend on the upside as far as weekly chart is concerned. So, but one thing that we have noticed in the international gold price as well as dollar gold price, even in a bigger chart, normally the trend is not. It is choppy when you compare to our own Nifty or Bank Nifty or US S&P. Normally, the gold as such, technically to trade international market can mean a lot of I would say a non-trending time for a longer period of time, which can result in much more technical losses, which can because of the lack of a clear pattern of the trend, because the overall trend looks to be on the right side. But when you look at the trading stop losses that you need to put in order not to get into a bigger loss, then in that case it can lead to a lot of choppiness. That is, stop loss can get triggered, then again it can rise. So that we have seen here. See, for example, let us say here. Now you see it goes down below this low. It goes down below this low and probably can trigger a sell side. But that is why we said last time that don't do on a breakout. That is the reason we are now talking also about is don't buy anything just because it has broken out below a previous low or broken about a above a previous high. Wait for a corrective bar to happen. So in this case also in gold, if you look at it now, it broke this low, right? So probably this low was broken here. This low was broken here, and then probably we would have gone short on a corrective bar low here. But then the stop loss is that particular. Here we are showing a weekly graph, so maybe the stop loss can be more, but the same thing can be applied as far as daily is concerned. So the stop loss can be above this. So the stop loss might have got triggered, but we are not going long there. We are not going long there. We are waiting for a corrective bar high, but before that again sell side happens. So then again we are not selling because it is a breakout buying, breakout selling. So again we are waiting for a dip. But by the time that we are looking for a dip, it has already crossed the previous peak. So now we have to wait for a correction. We have to consider this as a uptrend in a weekly chart, and then we have to wait for a corrective bar to happen before we go above that. So that is the reason, because at any point of time, your stop loss is very important. That your stop loss must be very clear for you. The stop loss that you should always elect as far as trading module is concerned should not be more than 1 bar, which is whether you are using an hourly chart whether you're using a chart in a weekly chart or monthly chart, whatever time frame that you want to trade, you should be very clear that it should be only one bar. It should not be more than one bar. Okay. In this case, when you're doing a weekly chart, is 1 week, so that the range will be high. So in that case, you have to look at the daily chart, right? So you have to let us look at the daily chart. So the daily chart is, let us say this is the Indian price, right? So now let us say the last one which we'll have. See, this is one. So what is the trend? This high was broken. This high where I'm keeping the cursor, that high was broken. Then please wait for a dip. Now there is, after this one, there is a dip. 2 bars dip is there. Then buy above a corrective bar I, and keep the corrective bar or whatever that comes just before that as a stop loss. Then you keep riding on your profit. This one. Now again, after that there's a dip, and then now again you buy, if you want to buy above the corrective bar high, and keep that bar itself as a low, as a stop loss. So that way you keep moving your stop losses to the next corrective bar low. Okay. So right now in this particular trend, we were above 50,705, and that trend is still continuing. We are long above the 50,705, and right now we are about 52,505. So we are continuing with the trend. So that is why we call this buying on dips. Is that please wait for a corrective bar, identify the trend. After identifying trend, wait for a counter trend, and once the counter trend happens, then above the corrective bar high, you go for a buy. Or if it is if the trend is on the downside, then sell below a corrective bar low. So that is the most important one. So this we can apply it even for a trading purposes. When you consider, let us say we apply it on a hourly chart also. Look at this hourly chart. Okay, so in the last couple of hours of trading. Now let us say this particular high was broken. So when this high was broken, let us say we have the option to go above this. But if it is only 1 bar stop loss, then you can buy on a breakout. If it is only 1 bar. So let us say we are going above this long, then we are keeping this low itself as a stop loss. That is 52,028. So we are long above the, in this case, gold bought 52,028, and stop loss was below that particular bar low. See this low hourly, it is 51,890, right? So 51,890 went above this. So 51,900, okay, 51,900, 51,890, whatever it is. So this is the trading call that we would have had a couple of hours back. So what we are doing is we identified the trend in the form of a Doe theory. There's higher tops and higher bottoms, and once that happens, then wait for a corrective bar to happen, correction to happen, then go long above the corrective bar high. That's all. So that's a very simple technique, and without doing any estimation of a moving average, or we are not dissuading you from using other technical tools in case if this works for you and if you have made some deep study about it. But what we are saying is this is a very simple technique. Okay, this is a very simple technique that you can think about using this. So now let us look at the so this price now it is still developing. So we will allow that to run and see when the next corrective bar low comes before we put in a stop loss. So in hourly chart, normally you will have in the as far as the gold is concerned, so you will have a lot of what I would say choppiness. So choppiness will always be there as far as gold is concerned, and at least in rupee terms, the gold choppiness is much lower. But when you look at the international price, the choppiness will be more there. It will be there more because it's a 24/7 market. So probably the time frame that we use has to be different from the time frame that we use as far as Nifty is concerned. In the case of Nifty, probably you can use Nifty for intraday. We can use 30 minutes chart also. But whereas we cannot use the same thing as far as gold is concerned. So that is where the fine tuning approach helps. But the overall concept remains the same. Only question is, in order to avoid choppiness, which time frame that you are going to choose is very important. I would suggest that even in the case of gold, better to go even for a daily chart, because any shorter time frame probably has its own risk. Okay, but in this case also you can usually apply, because we have come for intraday trading, buying on dips. No, you can also use our pivot points also for this. So let's say indicators, pivot points. So right now we are doing the pivot point formula calculation, and based on that, right now we are in the 15-minute chart, and it's the gold today 8th 9th August, right? So we are working from the evening time right now, and right now it has crossed, say let us say today it has crossed the R1. It has crossed the R1, right? So since it has crossed the R1, we can put the previous low as a stop loss. That's 52,139. So now we are above 52,483. So we can keep 52,138, which is also the pivot point, as a stop loss. So normally, you know, the pivot points can always be used as a stop loss in case if the market has crossed R1. Similarly, if it is below S1, we can use the pivot point itself as a stop loss on the reverse side. So here it's a very clear case that probably, you know, for the intraday trading, a combination of both the normal bar chart using it in the form of a Dow theory, or if you want to use it only as a pivot point simple formula, then in that case you can know that very clearly that 52,001, because normally this pivot point formula works very good in particularly international market. So let's say even the gold that we take in the international price, let's say the gold that we take there, the gold US dollar ounce. So the same thing, if you see the R1 has been broken, and today for the entire day we saw the pivot holding up 1782, 1783. That's a pivot that is holding very clearly on a close basis, and right now we are at R1. So once it broke the R1, we are at R1, and we can keep the pivot itself as a stop loss. That is 1782, 83 for the day. We can keep it. So even if you look at it yesterday also, it was trading below pivot for some time, and once it started to go above the pivot, then it was clearly on the upside. It was clearly on the upside. So to a very large extent, the pivot point support resistance helps you to avoid the choppiness. As far as gold, as far as international prices are concerned, this is a very clear way of using it. This is a very clear way of using it. So particularly because it's a 24/7 market. If you are using it in Indian markets, which is not a 24/7 market, particularly like Nifty or Bank Nifty, probably you can use the bar chart in the normal one, as well as this pivot point for your intraday purposes. So right now the international price is also in the upswing, and we can keep international price of 1782, 83 itself as a stop loss. So now we will move ourselves to crude oil. International, we'll move to Brent crude. So crude oil Brent cash. So we look at the first the big picture before we come to this. So let's look at the weekly chart. So the weekly chart, as far as Brent crude is concerned, it is now holding on to this low. See, this is a very important low, which is the 92. So $92 approximately is now is where $92, $93 is the most important, because last 2-3 times it has held on to this. So right now it is taking support closer to $92, and we have to see whether this $92 is going to be broken. If it is going to be broken, then probably we could look to be a little more bearish. So right now, if you look at this chart, now this is the lower see, once this low was cut, this is the top, and this is confirmed as a top once this low is cut. So we are getting a lower top. Because of a lower top, we can even go short below this. So going short below 107, keeping stop loss of 115. Now we are at a deep profit. So on a weekly chart, many times because the crude oil had a very good trend, and the weekly chart would have got you into a very good position. We can use the weekly chart as far as crude is concerned to identify the major trend, and the major trend is now getting itself into the downward thing, and it has to break above this high, which is the 107, 106. So unless 106.10 is not broken as far as the Brent crude is concerned, we are looking at some more downside as far as crude is concerned. Now there are many fundamental factors as far as crude oil is concerned. The production of the OPEC production, the agreement between them, and then the release of reserves by US, then the Russia-Ukraine. So there are a lot of fundamental factors at play as far as crude oil is concerned. So we have to be very careful as far as trading or investment in crude oil futures is concerned. So right now on a weekly chart, we can mark 106 as a stop loss. Now let's look at the daily chart, and then we'll come to the Indian rupees. Let us see in the last few months, the daily chart is a little very choppy thing. That is, it can get into a position of choppiness to the extent that very fast upside breakout or downside breakout takes place, and stop losses becomes quite steep as far as is concerned. Nevertheless, as I told you, we should keep only one bar as a stop loss. So let's look at this entire thing. So here, when the downward trend started, so this is a lower top we can consider, and we would have gone short here. And the last important thing that was this one. So this is the stop loss. This is the stop loss. Now we are not going to buy on the breakout of this. So we are going to wait and buy above this corrective bar high. Now corrective bar high with that as a stop loss. Okay, with that as a stop loss. So now what we are doing is we are removing, we are getting out of this position, long position here below that corrective bar low itself, and then the stop loss gets triggered. Now when the stop loss gets triggered, if you want to go short immediately on the breakout bar, then the same breakout bar I should be the stop loss. The same breakout bar I should be the stop loss. See, what I mean to say is, when you're going short below this is the stop loss, and not this as a stop loss. Same thing. Suppose if you want to go long above this high, then that particular bar low itself should be the stop loss. So let us say you went long above 113.84, and then the stop loss should be 111.64, because you should not take too much of a risk at any cost. Okay. So now let us say we were short from this level, then short, and then at this place we are removing the short because this is the higher bottom. So we are removing this. Now we are going long above this, and then we are going to keep this particular place itself as a stop loss. But what happened is that though you could have kept this as a stop loss, we need to keep moving the trailing stop loss, right? So here this bar was broken. Once this bar was broken, we are going to keep this low as a stop loss, because we have said always that if there is a breakout, then the breakout bar itself is a stop loss. Okay, that is breakout bar in the sense what price bar that has to be broken out in order to make it a bullish trend. That particular bar low itself is a stop loss. So what we are doing is that though we bought above this, we are keeping this low itself as a stop loss. So thereby we are minimizing our loss. So now suppose if you are going to go short below this and not waiting for any corrective thing to happen, then we should keep this I itself as a stop loss. So effectively the meaning that we are trying to convey is this: the stop losses should not be more than one particular bar high or low, whether you are going short or long. The way if you minimize the stop loss and keep moving your trading stop loss will definitely help you to make profit over a longer period of time. By cutting losses and allowing your profits to run during a big trend will multiply your equity account. Based on this only, you should devise all your trading methodology, and whatever that we are showing right now to you is based on that. Whether it's a daily chart, weekly chart, or whatever chart that we are going to show, we are doing that only with that purpose. Now, Same thing, let us say we'll go to the in this intraday trading. Let us say we are looking at the 15 minutes. We are just going to look the pivot points. Okay. So this is the pivot point, and the today, for a small time, for one particular bar, it just dipped below the PP, and then it started to rise, and we had a very big bar which is beating the R1 right now. So right now, it's we can say that no, it is on a long position. It is on it is right now on the long side, and the stop loss comes at this level, that is the PP. So normally, we do a centralized PP range, so probably this would have been taken care of. This would have been taken care of because we normally don't go for PP, we go for centralized pivot. So there will be some high or low below this. So right now what we are doing is we are keeping this low as a stop loss for the day. Okay, and crude oil now it is on the upside. Okay, so now you can look at towards some sort of a buying, keeping today's low as a stop loss. And another thing is that whatever we said is that no, we should also look at the since in presently the US markets open at 7 o'clock now. So we should be looking at 7 o'clock whatever the breakout that takes place around that time. So now let us say this is 5:45 and it is 6:30 to 7. So now at 7 o'clock we are seeing this particular bar, right? So this is the place where it is. So now if it starts to go again on the upside, you can remain long, probably keeping this low itself as a stop loss. That is one, because you are minimizing your stop losses. But the best stop loss will be still 94.65. Now we are long above the 97 levels, and we can keep 94.65 as a stop loss. So you can use this pivot point trading formula also alternately. In case if you find difficult in identifying a trend using a bar chart, in the case of an intraday, because in intraday will lead to a lot of choppiness. When we use a 30 minutes bar or 1 hour bar, it can lead to a lot of choppiness. In order to avoid choppiness for intraday trading, pivot point trading formula can be used as a standby formula technique itself, or it can be combined with any of the other technical studies which you may probably have studied already in depth. It could be a moving average, it could be a simple bar chart. Okay, so now we will go to the Indian crude price, crude futures. So Indian crude oil futures, since we started after 7, so there is no pivot point touching at all. So right now it went up to it went very closer to the R2, and it is trading closer to the R1 levels right now. So what we can do is that as far as the crude oil is concerned, we can put in a sell or a stop loss below today's low. Today's low is 72.70. So you can keep 72.70 as a stop loss and be on the long side. But in case if 72.70 is going to be broken, then in that case we may have to see a reversal which can take it up to 71.30, closer to the 71.30 levels. So 72.07 remains a stop loss now for any long position, and right now you can be on the buy side, keeping 73.07 as a stop loss based on the pivot point trading formula, right? So now we will look at the hourly chart. Okay, so we will remove this pivot point formula calculations. Okay. Now, crude oil has spurted up from 7,000 to 7,324 because of the spurt in as far as the oil is concerned in international price. So right now on an hourly, we look at the daily chart. Okay, in a daily chart, as we told you that no, we should be looking towards keeping any stop loss above a particular bar. So right now, when it broke below, see here it has been breaking low, and this was the last important low where probably no, actually we would have gone short somewhere below this bar itself, keeping this bar I itself as a stop loss breakout bar. Now here, what happened is the stop loss would have got triggered here. Stop loss would have got triggered here, and we might have gone long about this. If it had gone long, then in that case, now we would have removed our position here. That's what I'm trying to say. That is, if you have gone long about this, then this bar's low itself is a stop loss, because this is the bar which defined the definition of a bull trend. That if this high is taken, then in that case you are long. So that bar's low should become a stop loss. So after that, no, the stop loss got triggered. Then in that case, this is the lower top, so we went short here. And then this bar was broken here, so we moved the stop loss to this place. Okay, this high. Then again we went short below this, because still it's a lower tops, lower bottoms. So we moved the stop loss. We went for a sell somewhere here, and then we are continuing to remain on the shorter side of the market right now, and we are keeping the stop loss above this particular high, which is the 76.34. So right now, on the bigger picture, 76.34 remains the stop loss for any sell position as far as crude is concerned, and we are seeing lower tops, lower bottoms getting formed and getting entrenched as far as crude is concerned, but is receiving massive support closer to the this particular level, which is the 7,000 levels, as far as the, because 3-4 times even in international markets it has touched $92 and has started to getting some support. So let's see whether it is able to do the same thing here. So right now, crude oil on a weekly chart is also down. On a daily chart is also down. Let's look at the weekly chart here. Weekly chart confirmed low, confirmed down. So I think we should be continuing to be on the shorter side of this one. And any rally, probably we have to monitor for a fresh sell as far as crude oil is concerned. So this way, you take a view both on the fundamental picture of the market, then you look at the technical picture of the market also. Then whatever comfortable, that is your whether you should be in a weekly chart or a daily chart or an hourly chart, okay, or using the pivot point trading formula for intraday. Whatever that you want to decide, you can decide based on your comfort. But the trading philosophy should be is the losses should be curbed by having not more than one bar. This one as a stop loss. One bar should be the stop loss, okay, and you should let the profit run. If that is followed, then you are sure of making win over a period of time, irrespective. Because only thing that you should not be bothered is the number of win trades to loss trades. So in a choppy market, definitely you will have more losses, but the choppiness also gives way to trend at sometimes. So doing the trend, you will make more money. And so the overall objective is not to be focused on the number of win trades, okay. So psychologically you'll have to withstand more number of loss trades, but overall more profit. So that should be the basic idea of any trading philosophy. If you are getting a system where probably the win to loss is more than 65%, 70%, and still you have a profit factor which is 2.5 times of the loss, fine, fantastic, okay. So any trend following system, because of its choppiness doing so, that means 50% of the time only is trending. 50 or 40% of the time, if you look at any point of any chart over a period of time, basically in a smaller time frame, where probably you want to focus as a trader, which could be ranging from 15 minutes to daily, then the number of win trades to loss trades, the loss trades will be more than the win trades, okay. The lower the time frame it will be, but the lower the time frame will give you higher profit, because it is able to cut down the loss fast. So that is the simple philosophy in which we work, okay. So this aspect we have shown both in gold and crude oil, in terms of the weekly, daily and monthly chart, and also intraday, both in dollar terms as well as also in rupee terms. So now time is 7:34. So before in the next 10 minutes, we will look at the Nifty. Today the market is on a holiday, so we look at what's happening with the rest of the markets. First we look at the US S&P. So because we have a strong correlation to that, and then we look at the Nifty and look at what probably we can think about it. So presently the weekly chart, of course, in Nifty looks to be still on the stronger side, and probably we can keep this low as a stop loss. That is last week low, which is 40.79. So 40.79 will be the stop loss right now. Now we look at the daily chart. So I think the last couple of days, we are seeing some sort of hesitation in building any big run beyond this. So which means this is providing a very effective resistance. 41.78, 41.80 is providing a very effective resistance. So we could probably see some sort, possibly we could see chance that probably the reversal can take place. So that means probably this is one big leg of up move. Then there's another leg. Then probably we have another leg here. Then probably it's here. Then it comes down. So that is one possibility. Or probably for this entire fall, this is just what we would say is basically a counter trend to this overall big fall. So for this fall to get over, for this rally to get over, and to call this as a reversal, it should break below this top, which is 39.45. So the big stop loss comes closer to 39.45 as far as SPX is concerned. So you look at the Nifty trend. See, because of its strong correlation, now 41.70 to 39.45 is approximately 200 points, is around 5%, right? 5%. So Indian markets also has to fall by 5%, means then we need to get something like 1,000 points fall from the present level, which comes closer to the 16,500 or 16,600 levels. But let's look at Nifty right now. Now it has broken this top, right? So it has also come very closer to this. So in the case of Nifty, we have the important stop loss of in a daily trend, which is below 17,161. Right now 17,161 is the stop loss. But since there is a rally now that has taken place above this, which is already by this is 490 and this is 548. So maybe this will come to 17,230 or 17,240. You can keep as a stop loss. Now as far as Nifty is concerned, and any 3-day low, if you take it as 1, 2 and 3, so this is also an important low. And tomorrow when the market opens and sustains itself above 17,348, which it may eventually do, so we can move the stop loss basically to 17,348, because any 3-day low, generally if it is cut, then in that case it becomes a very important top. It becomes a very important top. So in this case, as we said, the important high being this, so we need to get below 16,805, 806 in the bigger picture to turn ourselves down into a bear market fall again. Right now things are looking good, but there will be a strong resistance as we go towards this trend line, which is coming closer to 17,830. So any point from here to 17,830 represents a very big risk as far as Nifty is concerned, which can pull it down. And we have got always in the last in this particular rally, the fall has been generally around 400 points or so. So from here or in any extended rally, minus 400 points will be the first important support. So that probably now it is 17,535, 17,150, 160 itself is an important place. If it rallies a little more towards 17,800 or so, then probably minus 400 points from there could be the first important stop loss. So which is around 2%, 2.4, 2.5%. So normally we see the first point of correction comes around 2.5 to around 2.5% approximately becomes the first corrective point. So which probably could translate into something like 400 points as the first point of a stop loss. So 400 points from the top has to be looked at, and we have seen even previously also that we get something like a 400 to sometimes there could be an extended position which goes up to 600 points also. But right now we are looking at since there is the bull. If it is a falling market, then in that case probably the rally is a little more steeper. Okay, but if it is a rising market, then in that case the fall will get a little limited, because if it is a bull market, the fall should not be that much steep. But whereas in a falling market, in a corrective uptrend, it could be much higher. So in this case, if it is going to be a bull run, then in that case we should not expect more than 400 points fall from the top. So which means whatever top that you get, minus 400 points will be. See here also in the daily chart, Nifty also looks quite choppy. Nifty doesn't look that great as far as the daily chart is concerned. But we can look at the important tops and bottoms here. Probably we can look at the line chart itself, which can a little more. Okay, so it's a little more clear as far as line chart is concerned. So I think this particular now we are heading towards this particular place, which is 17,639. I think this is a 17,639, and above that is 17,784. So this low, which is 17,639, represents the next important resistance as far as line chart is concerned. And this particular high which we got, so 17,392, is it? So 17,392, I think, yes. So 17,392 is a last important top. So 17,392 itself can be a very important place of support right now. So since we have already crossed that particular level, because for some time we were hesitating, see these 3-4 days we are now hesitating towards 17,340. There's a close for 17,388, 17,382. So for a few days we are closing around 17,370, 380 levels. So that is because it was not able to get below this low high, that is 17,391, 392. So it was stagnating. Okay, so now that becomes a support. So right now you buy, so your stop loss on a close basis should be below 17,380, 85 levels. So with that you can be long as far as Nifty is concerned. Now we look at the Bank Nifty. The Bank Nifty right now, so 38,635. So now the next resistance is going to come closer to 38,635, right? So this is 38,635, and we allow the support coming at this that is 38,024. So the first support comes closer to 38,024. So probably tomorrow there is a fall, then closer to 38,024 can be bought, and 38,635 is a resistance area. So closer to that place, if you are going to go for any intraday selling, you can look at that. But since the overall trend is up, we need to be careful about it, and we have to keep the last important stop loss, that is on a close basis, as 37,750. So the important stop loss as far as Bank Nifty is concerned, $37,750. So keep this as a stop loss. Keep this as a stop loss as far as Bank Nifty is concerned. Okay. So now you can ask your questions. Thanks for the participation today. Thanks for your participation. See you on Thursday with another important topic.